What's up, traders? I'm Hotshot. Welcome back. This is volume 4 in an ongoing series of what I like to call This is Better Than ICT Silver Bullet. It's pretty much my own continuation of ICT's OTE pattern recognition series. If you have not watched this first video, volume 1, I pretty much summarize ICT's pattern recognition series and his optimal trade entry primer video, all in this video here. Go watch this video so you're not confused in this video, and that way you understand the foundation and exactly what we're looking for. That way you're really not lost. So today's examples are going to be in Euro USD and USD JPY. Now, I'm going to give you a really sweet, awesome, simple way of finding daily bias. Okay, I wanted to come up with another word, but I couldn't think of another word on the spot. So this is going to be a real clean-cut, easy way of looking at daily bias. This is specific to Forex. You notice right here, we got the US dollar index, right? And it's obviously going up. So now we want to go look for the other currencies and see if there's a currency that's going down, and then we'll pair it, right? So we'll go through and look at Euro. Euro is going down. So if USD is going up and Euro is going down, what's Euro USD going to do? Euro USD is going to go down. So right there we have our bias. We know that it's bearish, and we're looking for the previous day's low to get swept and ran through. So now that we know our bias, we're going to drop to the 5-minute. Of course, our setup is 8:30 to 11. Right here to 11. Boom. And you can see our setup right here. From here to here. Tapped into our 0.62. ICT says he likes to enter on the 0.60 to assure him he's getting into due to spread, but keeping to the rules, you want to enter in at 0.62. So our entry is there. Boom. Stop loss will go to the next institutional level, specifically the 80 level above our 1 of our fib. First take profit will be the 0 level, specifically the first institutional level that gets tapped before it. So that will be 300. You can see that targets were hit at this very moment. You're going to take partials and you're going to move your stop loss to the 50% Fibonacci level. Next, we are going to target our 0.5, specifically the level, the institutional level before it. Since it's so close to 50, since it's 51, I'm just going to leave it at 50 and we're going to target that. You can see that that was hit, so we will take more partials there. This swing high was created, but it's not the second one. So we're going to leave our stop loss where it's at the 50. And then we're going to target the next one, which next take profit level will be the 20 level right here. And you can see that it got tapped right to the pip, right to the T. Let's see, the low of this one was, the low of this candle right here was 0.19. So it went past 0.1. It went past. Okay, so at that point, you would claim more partials right there. You could probably move your stop loss a little bit more, like right here, now that it's pretty far away. And you can see that price is already retraced all the way back up. And ultimately, we were targeting that previous day's low, which is this black line. And you can see once it ran that out, it retraced back into this candle's range. So this is where current price is sitting. We had a very nice Euro USD win today. And I know somebody also mentioned it in the comments on the last video that there was a nice Euro USD setup today. And here it is. It's a very nice one. Now, next example, if we remember, USD on the daily is bullish. Look at this one, JPY. Japanese yen is bearish. So if we go to USD JPY, what's it doing? It is bullish. don't say I didn't give you any guys. Don't say I never gave you guys anything. You know what I'm saying? I gave you guys some sauce in this one. Okay. So USD/JPY is bullish. We're anticipating price to attack the previous day's high. Okay. So we drop down to the 5 minute and we are going to annotate our 8:30 to 11. If we notice here, this is our previous day's high, the black line. You notice from 8:30, we have this extension up. This impulse took out all these highs over here, all this liquidity, but it didn't retrace back down. Instead, it impulsed again, took out this high. Now, if you notice, our rules are to draw our fibs off of the most recent 3 candle swing in that expansion, right? So the most recent 3 candle swing would be right here. I know you might say right here, but this doesn't give us much range, you know? So we would say right here. Now let's say that we got stopped out, right? We took a loss. We would then just drag our fibs to the next area that was logical, that made sense. And you can see right here, if we would have got stopped out there, we would have been manually entering around the 0.79. Boom, stop loss would go at the institutional level below this level, which would be the 0.0, or actually it's the 20. 20. First take profit would be the 80 level right here, right before the 0. It's 81, but whatever, it's 80. And you can see that it got tapped. Once it gets tapped, our stop loss will go from here to the 50 level of the fibs. We will move our stop loss in profit. You can see that we targeted that previous day's high, ran it out, and you can see that the next level, 0.5, we target the 50, boom, got ran out, take more partials, and now we are ultimately targeting the 50 level here. It hasn't got ran out yet. Again, like I recommended before, I personally like to close all my trades before 16:30 New York time. So in this situation, I'd probably be getting ready to close in full profit. So there was 2 very nice winners today, Euro USD and USD/JPY. Go check them out on your own. Thank you guys again for watching. If you like the series, drop a like, comment, and let me know if you see these setups as well. And if you're not subscribed, hopefully we've earned your subscription. Until next time, you guys, happy trading. Good luck.